How's it going, everybody? Happy Thursday. We pushed back our Hot Corner live strategy session this week because we had none other than the Chart Summit going on the last 2 days, which was absolutely amazing. If you were not involved, go get involved. It's not too late. You can go to chartsummit.com to watch the replay. So we have a lot to talk about. Markets are moving. The weakness continues. The corrective action continues. I have some charts to kind of put it all in context, and then I have maybe a solution, right? If the broader market's going to be weak, I think there are pockets of strength that we can continue to lean into. We'll talk all about them. First, let's get through this disclaimer. Nothing we discuss here today constitutes any solicitation to buy or sell securities. This is solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, head to allstarcharts.com/terms. This is it. Don't want you to focus so much on the price chart in this one. I want you to look at the momentum here in the lower pane. This is the daily RSI 14, which we use to measure momentum, and a lot of technicians use. This is probably the most traditional momentum indicator. During bull markets or sustained uptrends, we tend to see momentum get overbought on rallies and not oversold on corrections. The opposite is true during bear markets. We tend to see the corrective waves send us into oversold territory, while the rallies or the counter trend moves higher don't really get into overbought territory. So you can see from the lows of last October, this giant CPI day candle engulfing that we had, no oversold readings for almost a year. A couple overbought readings. This would be consistent with the bull market. What would not be consistent with the bull market is an oversold reading. Listen, yesterday or the day before, we got down to 30.06. 30 is oversold. We were 600ths away. Does it count? I don't know. Probably. Right? Not all oversold readings are created equally, right? So it's not like this thing plunged to the low 20s. It's right there around 30. But during strong bull markets, tend to get overbought readings, and then on corrective waves, tend to not pierce 40. Strongest charts and indexes won't even pierce 50 sometimes. So too close for comfort, I guess, is the point. You could say, yeah, never got oversold. We're still in the bullish regime. I don't know if that's really the right take on this. Right? Too close for comfort in terms of the downside momentum here, telling us more and more that sellers are not just taking control, but they've been in control really since middle of the summer now. So if this is a top, where do we go? So I got the short-term top drawn here on the S&P 500. We did take out those pivot lows, blasted below the key 430 level, which coincides with those August highs, which you see marked by this red arrow here. Where are we going? I could draw a line at these pivot highs here, which also coincide with the 38% retracement of the advance off of last year's lows. What does that tell me? 38% would be a pretty standard retracement. We're not even there yet, right? So I think we are going lower, probably. And I think there's a whole cluster of interest and price memory in the 430 to, let's say, 410 range. In blue here, you see the anchored VWAP off of the cycle lows and the cycle highs that come in, get pretty close together here around 410, 415. And then a VWAPs from these pivot lows earlier in the year, which is where the last few corrective waves kind of ended. All a big cluster here. So 430 to 410, messy. But if 410 goes, I think that's real trouble. If we look at the NASDAQ, doesn't want to go. Maybe not the most bullish action yesterday from the broader market, but tech and the NASDAQ, they hung on at least, right? And now tech's putting in a big candle so far today, major engulfing candle. I think they might come in and reverse this thing. The market's turning more and more green every time I look at it, pretty much green across the screen right now outside of utilities, which is just fine. That would be a very bullish tape, right? If everything's green except for utilities, that's just fine. the NASDAQ is trying to turn things around here right at this 355 level. You got the big wide range doji yesterday, now an engulfing. I think this could simply just be another failed top. Frank Capillari, I think, explained a very important lesson during his presentation yesterday, which was that during bull markets or uptrends, it's very common for bearish patterns to fail, right? In primary uptrend or in a bull market, we want to look for bullish patterns, right? We want to trade or err in the direction of the underlying trend. If we're looking for a bearish pattern to complete or execute during a bull market, the odds are not in our favor, right? So I think that's exactly what's going on here. When I look at the price action in the NASDAQ here today, or in technology, it looks like they're going to reverse. It looks like they're going to dig in here at these lows. So the NASDAQ looks very different right now than the S&P, which does have this little completed top. I think if we get a nice little rally into the end of the week, maybe the S&P can repair that damage, get back above that 430 level. We're trading just under 429 here today. And then you got the pivot lows from August, which come in around 433. I think you get confirmation there. You see them right here. So will these tops fail? The jury is still out. If we are going lower, if this corrective action is just picking up steam here and momentum is about to increase to the downside, you're going to see the laggards or the weakest indexes or the weakest stocks break down first. When I look at the Russell Microcap Index, IWC, this is the epitome of weakness from a size perspective, right? The megas are the strongest, and then it gets weaker and weaker and weaker as we go on down the line. So you see microcaps in the lower pane here making new all-time lows relative to the S&P 500. And then just look at this range. You know, a lot of areas and charts based and resolved higher from bases. The NASDAQ and tech and industrials ran on to test these old highs. Microcaps never got up off the ground here, right? Just chopping around these range lows, made a new multi-year low just the other day, 2 sessions ago. Can that bounce back and repair it? Can microcaps hold the lower bounds? If you're a bull, you better hope so. I think if microcaps break, look right to small caps. They're probably going to retest those range lows. And if they go, that will be a real problem. So again, let's monitor these short-term patterns. Let's see if these are valid pattern resolutions or if they're failures, in which case we probably resume higher. And maybe this was the seasonal low that everybody's looking for. And I think from what I'm hearing and what I'm reading, everybody's watching the seasonals these days. Everybody's expecting this, buy in October thesis to play out because seasonals have been so perfect for past few years now. Listen, it doesn't always follow the seasonal pattern. Maybe that breaks down. I don't know. It seems like a lot of people are watching this and paying attention to this, looking for this October low or late September low. Maybe it's it, maybe not. I don't think the seasonals can continue to predict the current trend in markets as well as they have. Jeff Hirsch will tell you the same thing. If you don't believe me, go listen to our morning show interview from this morning. We talked all about it. Now, context, intermarket context. All of this is going on in an environment or in a tape where the dollar is breaking out of its range, showing incredible strength, and interest rates seem to have made a valid upside resolution from their rectangle pattern. Right, so you see the 10-year up top here in black, and the dollar here in blue. Yeah, rates just keep going. The 10-year, 4.6 today, and the dollar giving back some today, but it's just been so strong. So these breakouts, and if we get higher, legs higher in interest rates and the dollar, that would be consistent with an environment where stocks are under pressure or risk assets are struggling, which is what we're seeing. Now, Ian Coley's presentation yesterday, so good. Go check it out. Be sure to watch the replay. Basically, everybody was talking about how, corrective action, messy markets. There was a generally bullish tone, but kind of like a wait and see. I don't know. There's nothing really good out there going on right now. We got to see how we get through this correction. And then Ian came on and was like, what about energy? What about commodities? There's opportunities here. And he's totally right. So here's XLE. I think we're just about going from this range. XLE trying to surge back up towards those pivot highs right here today. 93.50 would be that level. We're trading around 92.60 right now in XLE. But if you look beneath the surface, some of the largest components, ExxonMobil already went. right? So here's the long-term view of energy, just a massive base that dates all the way back to those pre-financial crisis highs. And the strongest ones are already going. ExxonMobil is resolving its range higher, taking out that 120-ish level. That was our last price target. I think it was actually 122, but we're just about there. Exxon is trading right around 119.50 as we speak. Tagged 120 yesterday. If you weren't already long, if you're not already long, we think we can get long and use 120 as a clean entry point at those pivot highs, or you could buy weakness back towards 105. Not sure if you'll get it though. At this point, our target or our next target in Exxon is 151. Hess, I think you can try to use the pivot highs here if you're not already involved. 130 was our level in Hess. I think this one's very much going to go. This is one of the leaders in the space. If you're looking for an entry here, use those year-to-date highs or first quarter highs, call it 160. You're looking to enter. We're trading around 157 and change here today. Massive base though, right? When I think of this Hess chart, I think of it in the context of this XLE chart, right? This base is going to go an XLE. Why not play it through something like Hess, which is already gone, right? So this is a leader because it's already completed that base back above those pre-financial crisis highs. You could say the same thing about ExxonMobil here, back above these key 2015 highs, right? By these big base breakouts, once we get these structural pattern resolutions, it's usually not just a couple weeks or even a couple months of follow through or upside. These trends can last for years, right? So I love these big bases. Hess is one of them. If you're looking for an entry, I think we could use 160. Conoco already kind of got a base breakout. Now we've been rangy. 127.50 is our new level, right? First target hit. If you want to get long here, 127.50. Upside target of 193. I had a director out here purchasing over $1 million worth of shares back in February of this year. Total Energies. This was France. This was a political filing. Not nearly as strong as some of the other ones that we just discussed, but you're looking for some international oil and gas exposure. This is one of the bigger operators overseas. 65 is a great level. You have a nice little base shaping up. I think we continue to climb up the right-hand side of this base. Play this from 65 up towards 91 and change. Gives you almost 50% of upside from here in a very big name that's going to pay you a nice yield as you go. Phillips 66 PSX, more on the refiner side of things. Gregory Hayes, which I think we talked about on here. I think he's still the Raytheon executive, Greg Hayes. He is on the board at Phillips 66, bought $1 million worth of stock. Maybe he's a technician because look, this level's been tested several times. We're knocking on the door again. We continue to absorb more and more overhead supply up here in the 123, 124 level. Could use that as a trigger to buy on strength, call it 123.50 in PSX with a target of 175. Northern Oil and Gas, NOG. We have an activist in this one, 13D filer. They own about 8.7% of outstanding shares. We have these 2018 highs, which are such a great place to define our risk, particularly in commodity stocks or energy stocks. Those come in right around 44.50. We're just about there now, close enough. So this is another buy on strength setup, 44.50, target of 70. Tidewater Inc. I think we've already hit at least one price target in this one. This is one of the stronger names. Again, see, we talk about buying something like NOG, just taking out those 2018 highs. Well, we've been in the leaders for a while, like Tidewater now, which took out those 2018 highs last year. TDW already hit one target, well on its way to its next. It's not super actionable right here, though. If you're long, stay long. But if you're looking to get long, kind of in the middle of our two objectives right here, right now. Oceaneering International, OII. This is those underwater robots that I mentioned a lot. I think this company is really cool. That's about all the fundamental analysis I can tell you about it, though. The chart looks pretty good. The base is shaping up. The oil services names look more like this, going off these steep downtrends. You know, several years of basing, and a lot of these bases are just getting going now. We have multiple insiders in the name. 2150 is the level. Kind of already left the station on it. Let me zoom in, see if we have anything more tactical. I don't know. This one's tough if you're not already in it. So weakness back towards 2150, target of 34. You can get long again there. Rig, already hit one price target in rig. a really steady uptrend, right? We leg up, we coil, we leg up. Now we're coiling again, 775. Got a lot of price memory here. Look, you're going to get almost a double in this one, 775 to 14. Rig's got the juice. This is a high beta name. What is their market cap these days? 6.5 billion mid cap. Used to be one of the bigger rig operators in the space. More and more oil comes online, more and more rigs come online. These are the companies that are going to have to service them. So I think this is a big play here. One of the juicier names. If we're above 775, I do like rig a lot with a target of 14. All right, for you dividend guys, we have some MLPs here, some midstream operators. This is Plains All American, PAA. Kevin McCarthy, a senator, Form 4 filer. I don't know. So 1227, we had a shelf of old highs there. I think this one's going back to 25. You could define your risk much better in something like Antero midstream, though. AM 1170, we're there right now. It's super actionable. Price target of 1475. You got the CFO and the VP as Form 4 filers in this one last year. Stocks will pay you juicy yields, and I think these yields are as safe as ever with what's going on in the oil and gas industry these days. New Park Resources, that's NR. First target just about getting hit up here at about 740. If you like it, you want to stay long, I think you can. Maybe be a little bit patient with it because this one's been moving. It's probably a little bit overbought here right now. Yeah, New Park. Wow, just the momentum profile on this name is incredible. Up another 2% here today. Be patient with it, but I wouldn't go selling winners like this here. 740 is the next line in the sand, and I think you could stay long towards 1150, 1160. Activist in this one too. Another MLP, Magellan Midstream Partners, MMP. Politicians love these. They love their dividends. 30,000 to 100,000 from Virginia Fox. She's a House of Representatives member. This was last year. We have a clean level here at the pre-COVID highs, 67.50. Taking it out right now. So if we're above 67.50, we do like Magellan Midstream towards 95 and change. Thank God. Let's get to the uranium stocks, huh? Listen, uranium is red hot. I would encourage you guys to go. There are more names than just the names that are covered here in our hot corner universe, right? So go and find some of the strongest uranium names or nuclear names, and you can use those as vehicles. Also, we do have two good ones though. This is Centrus Energy, LEU. So it's really actionable. When we talked about it last week, 51 kind of went, retested, and now we're going again. This thing's trading up close to 60 here today. Yeah, these stocks just don't stop. So it's above 60 now. So either weakness back towards 50, or you're going to have to wait for some, high and tight flag or continuation pattern and get long there. But these stocks have very much left the station, most of these uranium names. So if we're above 51, we do like Centrus towards 89 for those late 2021 highs. Here's UEC. We said, hey, you could get in at 430 if you're just looking for a level to get into this at. Maybe not the cleanest, but was a 62% retracement of massive drawdown that began 2011, ended 2020. Really, 665 is the level. So if you're already involved, good for you off of that 430 zone. 665, you get a massive base breakout. I think this thing goes a lot higher. But again, these are longer-term setups, longer-term trades. This is a massive base, right? So you do want to be patient with it. But I like seeing the CEO in here buying shares in Centrus. All right, let's get away from energy real quick. Two more names. Donnelley Financial Solutions. Guess what? It's not a financial. This is actually a software stock that services financial services industry. And you see a lot of these strong names. Aspen, I think, is another one. But these software companies that provide software compliance or trading software for different financial institutions tend to be some really good software stocks. This is one of them. DFIN, if we're above 52.25, we like it long towards 69.50. And again, not many software stocks look this good these days. I just ran the new highs list on the industrial metals and mineral space, and it's URG, CCJ, DNN, UEC, and LEU. In other words, all uranium stocks. Oh, that's great. C Limited, this is one that I got involved in just yesterday or the day before. This is a counter trend trade, right? It's a little bit cute. Not exactly catching a falling knife, but I am buying a primary downtrend, I'm just looking for a quick trade to fill this little gap here, right? So we undercut those lows from late last year. And C Limited, this is an online retailer that services Southeast Asia. I'm a big fan of the company. Fundamentally, it's just a huge brand out there in Asia. I think they'll eventually figure out what they're doing here, and the stock will reverse, and we will have a primary uptrend that we can eventually get behind. Maybe I'm jumping this one a little, but I do like from 41 to 56. I think we could get a pretty quick move higher. So I am in the common, and those are my levels. So below 41, absolutely can't touch it. Above 41, I think it's a great trading opportunity. So C Limited towards 56. I think we fill this gap pretty quickly here. That's all I got. Let me check the chat. See if anybody's talking to me here. Mary loves the classic non-tops. Me too. Some of my favorite patterns. Dollar hit an important level today? Yeah, maybe. Dollar's been incredibly strong. It deserves to cool off. Colonel Zanders, if dollar rolls over, shouldn't oil blast off? Here's the problem. Oil and the dollar have been rising together, right? So yeah, I think yeah, if the dollar does cool off and oil and energy stocks have been able to trend higher with a stronger dollar, I think that can only help them. But we'll see. Check out Sun. Okay. IMO. Thank you so much for. Thank you, Achilles. That's awesome. I'm not sure what the question is. Wanted to ask you, I know you guys like to zoom out when looking at charts. How do you think about entries? What's SL mean? Oh, stop loss. It gets tricky when you zoom out so much, right? No, you zoom out, right? It's a good question. You want to zoom out and be aware of the structural trend, right? Something like this in energy, right? So I know there's a massive base here. Lower 90s is really the breakout level confirmation at the all-time highs of say 102, right? So I know, okay, energy is something I'm interested in structurally when I zoom way out. Then you dive in, right? Look at a daily, drill in a little bit. Okay, so I like energy. I think we get this massive breakout, and look, we have a primary uptrend, then a prolonged consolidation within the context of a bull market. Keep knocking on the door to these new highs, 92, 92, 92. Again, when we zoom out, you see 92 again. Wow, what a big level. So you do a little bit of both, right? You look at the long-term chart, decide that you like it, then you drill in, you zoom in, and you find a more tactical level to get involved in. I hope that answers your question. Send us an email if you want to know more. I also would monitor, for me, I think we get the breakout from XLE and Equal Weight Energy, which is RSPG. They changed the ticker on me. I think we get that breakout soon, and I'm looking at the relative trend for confirmation. Energy stocks are high beta. When they're in a bull market, they tend to be outperforming the rest of the market too. So I'm looking at RSPG, RSP, which is Equal Weight Energy versus Equal Weight S&P 500 ratio. And we're also right there. It looks a lot like XLE here. This is XLE SPY. I'm talking about the equal weight version of this in the lower pane. Sorry I didn't bring it along, but that's what I'm watching for confirmation. I think we do get it soon. And I think energy stocks will continue to be the place to be into the end of the year and probably even next year if interest rates keep moving higher. So we'll wait and see. Let's monitor these short-term tops and the major averages. Let's monitor these short-term tops in all our different sector indexes, whether it's XLK or even the NASDAQ 100, right? I think we might be reversing it and repairing that damage. That will probably be a key tradable low that you can get behind. And there'll probably be some great entries into the end of the year off of these levels. But let's wait. Let's see the market repair. Let's see the bulls come out and defend these key levels first. All right, guys, that is it. We'll be right back here in an hour at 1 o'clock. Patrick and I will be doing chart requests live. So you have any tickers, if you have any energy stocks that you're interested in that I didn't cover, come back at 1 o'clock, drop them in the chat, request them, and we'll chart them out live. It's always a lot of fun. Any other questions, comments, concerns, want to say hi, hit us up, info@allstarcharts.com. And we'll see you here next week, Wednesday at 1 o'clock for the next Hot Corner strategy session. Thanks for joining, everybody.